again, traders, and welcome back to the Pro Trader Network. These are our 4-hour charts, and I do want to look at this pound yen daily chart. I'll show you what I'm looking at there, but let's first start with the euro yen. And we had this double top with bearish divergence that we talked about last week. We had a sell-off that took us down to the 382 of our overall long-term rally, and then shorter term we came down and got held off at about the 50% retrace. Here's the 382, here's the 61. This is the 50% retrace. Looking for this rally to culminate here at the 618 of this sell-off. Right now it's at the 382. So we have A to B, B to C, and C to D down to the 50% of this overall rally. And as we know, if we pull our fib expansions in, which I'm not going to do, which you can do on your own, the 50% retrace tends to expand to the 141, and that would be the 50% retrace of this overall rally and back into resistance right here at the 3680s plus or minus. So that's what I'm looking at the euro yen. Same thing pretty much on the euro Aussie. Overall long term on the rally, way overbought right here, and then we had the sell-off, retrace, and continuation back into resistance. Look left, structure leaves clues right around the 144 even handle, 143.90s plus or minus. So that's what I'm looking at on those two pairs. And then the Swiss yen we talked about last week, we rolled over and we sold off down to the 50% of this overall rally, and we've retraced to the 50% of this sell-off, and looking again to come back down and complete the ABCD harmonic move right around the 130.20s. And look left, we may not make it all the way down here because we have a pretty strong consolidation zone of resistance right about the 130.70s, but I'm looking for this continued sell-off to the downside after coming out of this overbought condition. I'm also looking at the Kiwi yen. I'm waiting for my market baseline to come down here and complete this oversold condition, and we have bullish divergence, price moving down, oscillator moving up. So I'll keep my eyes on this. And of course, this news after, I believe it was Kurata, made some comments about the Japanese economy and supporting their currency. I don't remember his exact comments, but we had 200 pippers on all the yen crosses the other day, and that created this particular sell-off on the Kiwi yen. So I'm looking for that as well. On the pound daily, we have way overbought still. We're still in this extreme overbought condition, but you can see now we came down here and retested this consolidation zone. We came down, but we didn't close below any of this price action, and we retested and created a new structure high right around the 192 even handle. But I'm still looking to get short. This is exactly what we like to see. We like to see a bit of a retrace and then a thrust to the upside and then this rolling over. So I'm tracking this continually to put a pending order, pending sell order below the low of these candles in here that are creating this continued bearish divergence. Look, we have price moving up and our oscillator continuing to move down. So this takes a lot of patience. This is a daily chart. It will take time, but this would be a very highly profitable trade. So keep your eye on the pound yen. So there are a few swing trades and then this longer term position trade on the pound yen. The euro rallied on Friday out of some positive news from the situation in Greece, but we'll have to see what the lasting effect of this renegotiation as Greece is going to fail to meet their commitment to the IMF to pay off some of their debt. We'll have to see how that's restructured, and it looks like Germany is no longer going to continue to fund the Greece debt debacle. So we'll see how that plays out. So keep attuned to these euro crosses, because any news from any of those finance ministers, banking presidents, and so on will clearly affect all of the euro crosses. Thanks for being here at the Pro Trader Network, traders, and as always, let's stay focused, follow our rules, and I'll see you next time.